With the surge in retail brokerage account openings this year, there are a lot of traders out there that are just starting their investing journeys. So we wanted to take a few minutes to go over some trading tips for beginners to help speed up that learning curve. And joining me now to do just that is IBD's own Mike Webster, our head market strategist. Thanks for being here today, Mike.
Hey, thanks for having me.
All right, so the rally that we've seen after that coronavirus crash has been pretty incredible, right? A very fast recovery and a lot of stocks that are making huge moves and have done so over the past couple of months. But it's important for beginners to know that the market doesn't always act like how it's been acting as of late, right?
Well, you know, this is a crazy time and it is very unique. And if you look back in history over the last 100 years, there's only a few times where we've seen something like this. You know, you had 1928 and 1929. You had a move like this in 1958, and you know, fast forward through time, you know, 1998 and 1999 is the one that everyone talks about. And there's a few other, you know, isolated cases, 1980 and 1981. But this is unique, and the market, I wish it always went up, but it doesn't. And so you want to trade with the trend. And right now, the trend is clearly up, but you need to know what to look for when that breaks. So you want to focus on just simple things like moving averages. You know, use a shorter term moving average, like a 21-day moving average. You know, that's your first line of defense. If we start trending under that or even breaking below that, you want to ease off the gas pedal. And if we go through the 50-day, then you want to start putting on the brakes. And if we come all the way down to the 200-day, well, that market isn't going up anymore for a while. So, you know, it's as simple as that, really. There's a lot of nuances that we get into, but if you could just look at your 21-day, your 50-day, and your 200-day, and you keep that gas pedal on when you're above the 21-day, but then you start easing off as it starts breaking those longer term trends.
So just like timing the market is key, timing your buys, well, that is also key, of course. And if you're just buying a stock because you like the company and you're not looking at a stock chart, well, that could cause you to buy a stock at the wrong time when the odds aren't in your favor. So how can you get the odds in your favor when you're buying a stock?
Look, there's a precise time that you should be buying a stock, and there are lots of times where you shouldn't be. And there's just a small window of time once you learn how to read charts. And charts, you know, are not intimidating. You just start off with the basics, and it's like anything else. The more time you spend with it, the more of the little nuances you'll pick up. But it's just simply pull up a stock chart, look at an area that it's trying to get through. Let's say it's trying to get up to $100, and every time it gets there, it backs away. Well, that's your what we call resistance, or that's your ceiling. And you'll hear words like a pivot point, but all that means is you're going through this area that it didn't go through before. That's when you're buying it. Otherwise, if you're just buying it willy-nilly anywhere else, you're just subject to just random pullback. So get that wind at your back and wait for that, what we call pivot point or buy point, and buy it there. And it doesn't take a lot of time in front of charts to get the basics. The rest of it is going to take a lifetime to get all of those fun nuances. But also start with the stock that you like. You know, you had Dave on earlier, and he's great at that, of finding those stocks that he likes. And he's into pizza, so maybe you're looking at, you know, Papa John's, and you're looking at Domino's Pizza, and you're looking at those charts and seeing when the right time it is to buy it. And then once you buy it, if it goes down, let's say you buy a stock at $100, if it goes down to $99, you've done something wrong, right? Your timing was off. Don't buy more, ever. Never average down. And if it goes up higher, maybe you want to add a little bit more because that's a winning trade, but never put good money after bad, and never average down under any circumstance.
You mean I can't buy a stock that I really like when it goes on sale? I'm not just getting a better deal on it?
There are lots of ways in the market to make money, right? And you buying in a pullback when it's on sale in an uptrend is a good way of trading, but buying in a downtrend, that is a recipe for just blowing up your account. So let's say it's your favorite stock, and it's well, we were just talking about Papa John. So it's been in an uptrend. So if it pulls back off of its highs into a logical area, let's say, you know, to its 21-day moving average, and then starts moving higher, well, you can buy it there, and then just have a stop under it, an area where you're going to say, you know what, I'm wrong. And we like to use 7% from whatever you paid. Some people like 5% or 10%. Find a line that works for you, and a number that works for you. And just say, you know what, if it goes down that much, I'm just going to exit, and I can always buy that stock back. But yeah, you can buy stocks on sale when they're in an uptrend. And the easy way to know if a stock is in an uptrend, look at its moving average. Is it above its 200-day and above its 50-day? If it's not in an uptrend.
That's exactly right. And, speaking of selling, it can be difficult for investors, especially beginners, because there are so many emotions that can come into play, right? Like greed or pride or hope. But if you have those sell rules like you're talking about, that can help you from suffering huge losses.
Look, everyone has fear, hope, and greed. That's what makes the market go up, and what makes it come down. And anybody who tells you that they are not trading with those emotions, they're either lying to you, or they don't realize that they're doing that. Now, what you want to do is reduce those emotions by having sound rules that you believe in, and so study the market, study what works. It doesn't take a lot of time. Just look at what's been working recently, and have some ideas. Say, well, I wonder if I bought it every time it came down and touched the 50-day, how would that work? Or every time it goes into new highs after it's been going sideways for 5 weeks. Just come up with your rules. We have all of our rules. We have tons of education, but it's fun to investigate and do this yourself. And then the more rules you have, you just then know what to do. Now, if you break rules, that's when the emotions start building up. But if you have a good set of rules that you believe in and you understand, and even if they're very simple, buy it right, buy it at a point that's logical, have a stop loss, and don't average down. All of a sudden, those emotions that build up every day is going to be less. And you want to have fun with this.
Mhm.
This is a good time. Just, like Dave likes to go and bet on games. I don't know the first thing about betting on a game. I would like flip a coin and to decide, who I'd want to bet on for a football game. And so he has an edge there. With trading, we have an edge with the rules that, the firm has developed over the years.
Yeah, and that's going to show up in the results in your portfolio, right? And just like cutting losses, talk to us briefly about taking those profits on the way up, because that's also where greed can come into play. If you start making a lot of money on a trade, you don't want to give up those gains. So, you might start holding and hoping when that trade starts to move against you. If you start thinking you're in love with the stock, it's never good to marry a stock.
No, you don't want to marry. You want to like what you're trading. You don't want it to just be a symbol. So, a 4-letter symbol, a 3-letter symbol. You wanted to kind of have an idea of what the company does, have a thesis of, I think this stock is moving up because more people are going to that restaurant, or more people are using their iPhones, what have you. But then, as you're right, you want to start taking some of those chips off the table. So just think of it, if you've ever been at a craps table, and the table is hot, and your stack is just growing and growing and growing. Well, what I like to do is just every once in a while take a few of those chips, put it in your pocket, and then, you know what, if table gets cold, you walk away, you go to the cashier, you still have some money. So, don't let the stocks just go way up and then way back down. And a good rule of thumb is, if you're up 10% or more on a stock, raise your stop loss where you're going to cut and run up to break even. So if you buy a stock at $100, it runs up to $110. Don't let it fall back to 90. If it falls back to 100, get out of that stock. You can always buy it back. And that's one thing that people should always remember. It's okay to sell because you can buy it back.
Yeah, that's definitely important. And speaking of stocks that can go up and down very quickly, penny stocks are very emblematic of that. And there can be a lure for some investors who think that if they can get a low price stock that goes from 3 to 6, that they can double their money quickly. But what kind of trap can you fall into if you're focusing on those kinds of stocks?
Yeah, and no offense to anyone who's currently trading those, but it's cheap for a reason. The big institutions that really move stocks, up and down. They're trading in the real market where, higher price stocks that are more liquid. We consider the $2 stocks, the $5 stocks, the junk pile, because they're cheap for a reason. Now, sure, they can go up from 2 to 10. They can come from 10 to 0. You're just playing with a lot of, that is really Vegas money, but it's not investing or speculating. So, a good rule of thumb, just look at stocks that are over $25 and that are trading at least 500,000 shares a day. That's going to put you in the right pond to fish in. Sure, you're going to see some stocks go from $1 to $3. That's a huge percentage gain, but you're carrying on too much risk. So $25, 500,000 shares on average, and that's going to be a quality pile to at least be picking from.
And from a risk perspective, what should investors be thinking about in terms of how much money from their portfolio they're devoting to a certain trade, and thinking about their position sizing?
That's a key aspect, and it will take years and years to really get it down right. So a good rule of thumb is just take your account and divide it into 10 chunks. So that's whether, if you have $100, you're dividing it into $10 each. If you've got $100,000, you're dividing it that way. If you've got $100 million, you've probably already figured this out. So, just divide it by 10 and never put more than 10% into any one stock. That way, let's say the worst case scenario happens and you have $1,000 in your account and you put $100 in one stock and it goes bankrupt overnight and goes down to 0. Well, you still have 90% of your assets left. Whereas if you put your entire portfolio in one and something goes wrong, you've got serious problems. So just don't put yourself in a position to blow up 10% per stock. Over the years, you'll figure out how to, sometimes have a little bit more, sometimes a little bit less.
So probably one of the biggest pieces of advice that we could share would be the importance of learning from your mistakes, because we all have to go through that when we are starting our investing journey. And even you as an advanced trader, you're learning all of the time and improving and getting better and better.
Yeah, I used to do it once a year where we do this thing called a post analysis. And it's this thing you dread all year. You're going, okay, at the end of the year, I'm going to look at all my trades and figure out what I did right and what I did wrong. And sometimes the amount of time between when you made the mistake and when you're studying it is so far removed that you don't really remember all the pieces that were going on. So now I just do a little thing, at the end of each trading day, I take, 2 to 5 minutes and just think, okay, how did I do today? What did I do right? What did I do wrong? Just think, okay, what adjustments do I need to make? It's as simple as that. It doesn't have to be this huge thing. You see some big stock that you missed out on. Maybe you shouldn't have bought it. There wasn't in position to buy, and that was a good thing that you just let that one go. And so just learn every day, write down little rules, put it in your phone and just say, don't buy an extended stock, a stock that's too far out of its basing area of its area of consolidation. Don't average down. We talked about that. If you do it, just say, I know the stove is hot. I'm not going to put my hand on there. So you're always learning. And just think about it. It's just like, an athlete is learning. A football team, they're going to sit and study their plays and how they did. And when they did it a certain way, what was the outcome versus something else. And so we're doing the same thing in the market. And you are going to make mistakes every day of your trading career. That's just a fact. Everyone does it. Anyone who doesn't own that is not being honest with themselves. Your goal is to make those mistakes smaller and smaller and to learn from them each time.
All right, Mike. Well, leave us with some final words of wisdom for all those new beginners out there.
Have fun. This is, invest in what look at what your friends are buying, what you're spending money on, and then could go pull up the chart and see what it looks like. Learn something about what the company is doing. Don't buy right before an earnings release, but keep it fun and keep it small and always learn every day. And I wish everyone the best of luck.
All right, Mike, thank you so much for helping us break down all of these golden rules of investing, I guess I should say, for those beginner investors out there and those who could use a little brushing up on their trading skills. We really appreciate it.
Thank you.